It is Cardano that has grown grassroots since 2017 without any major marketing or anything due to the nature of it. That's being decentralized and all of that. I've talked about it a million times. It has not had a whole bunch of venture capital money to buy narratives. It's everything it's accomplished. It's done on its own merit over time by doing things the right way. That is something that continues to exponentially grow the sentiment of Cardano overall, and you can't really challenge that long term. The only way you could try is by buying bogus narratives through the crypto sellout soulless media, and that's it, and hope it lasts, hope it gets you a little more volume, hope it gets you a few more token accumulators. But in the grand scheme of things, it doesn't actually change the overall picture, which is why I say you shouldn't worry too much about it. Now, an analyst has recently projected that Cardano could surge to $7.10, a 10x rally from current levels. I personally think it's gonna, I'm still holding. I still think $8 may very well be a conservative estimate at this point. According to an analyst projection shared by Cardano Ecosystem Insider, ADA appeared primed for a potential 10x rally. The analyst cited historical patterns, especially the bullish inverse head and shoulders formation that led to a massive rally to ADA's top in the past cycle. If validated, that would translate to an ADA price target of $2.90 or $7.10. And, you know, I've calculated the potential price of getting to Cardano, getting Cardano to $8 so many times over the years now. And they all just line up, and it doesn't matter how I do it. If it doesn't matter if I'm using time scales, fib, it doesn't matter what I do. Everything points to $8 this cycle. And so we just have to wait and see, because while Cardano goes up, there are a lot of big bag holders, and we're going to be fighting, depending on where we're at in the cycle and the price at that point. I mean, we're going to be fighting a lot of sell pressure. And you know, so it just really depends on what happens with the government, the policies, the stable tokens, liquidity, all of that stuff. But this is market cap dominance of Cardano on a weekly chart. So every one of these candles is weekly. And this is basically showing, like back here in July of 2021, you can see where the dominance fell and then started to skyrocket again into that first big peak in 2021. And matching that, even with diminishing returns at 153%, this is basically saying that market cap dominance of Cardano could get to around 3.5%. I think it's going to be significantly higher than that. This does not, there's no way this is taking into account Bitcoin OS and IOHK's version of it. When Bitcoin's price reaches $200,000 and we have multi-trillion dollars worth of Bitcoin, likely even more, if we start selling gold, listen, folks, if we start selling gold to start accumulating Bitcoin, this is just going to send Bitcoin through the stratosphere, because we're also seeing other countries lining up to start doing the same thing to be competitive with what the U.S. does. Typically, the United States is the flagship for all action across the board with other countries. What we're also going to see is we're going to see a battle in crypto as everybody tries to fight and either establish control or dominance. There's going to be one or the other. Dominance is going to be like the U.S.'s approach. Control is going to be like the EU's approach. EU's all about the CBDCs, controlling everybody, controlling everything, censoring everyone, silencing people that say anything. I mean, it's like, it's 1984. It's straight out of the book. If you're not familiar, go read it. It's all happening in real time in the UK right now. It's absolutely mind-boggling. But you know what they don't have over there to like basically defend themselves? Well, they don't have the right to bear arms. They don't have a lot of the freedoms that we have here. And they've been laughing at us for so long because we have it, and they're basically calling us out. I just saw something recently where I don't know what they call him, the prime minister, whoever it is over in the UK, where he's basically talking about how knife violence is basically like an epidemic now. And it's just like, you know, on top of that, the criminals don't care about what your laws are. And that's been proven too, because gun violence has also apparently been going on the rise. So this is all nonsensical, but it doesn't matter because it's not supposed to make sense. It's supposed to establish further reigns of control over the populace. And the US is taking the complete opposite approach of all of that. So we'll see what happens. But that's what we're seeing play out. Now, Ada's search interest versus whales. Everything is going up. That's basically what it boils down to. Reading through this, everything is going up. So it doesn't really matter. Now, let's take a look at the pi cycle real quick. This is the pi cycle, still a wide berth. Let's refresh this just to be on the safe side. And I'm going to open up basically where we were last market cycle. Oh, that goes off the chart. So this is actually up a little bit higher. Because of this little dip we're having right now, you can see the pi cycle breadth basically expanding a little. And, you know, you can see if we were to take this all the way back to where we were in the last market cycle, we'd be like somewhere around here before it really starts to narrow in. And, you know, we've got months to go. So this is actually, you know what it looks like? It looks like this right here. Wow, that looks like that. This looks like where we are right now, right here, in terms of price action and the relevance of the, like, you know what I'm going to do? I'm going to go back out here. I'm going to refresh this. I'm going to go to I want to cover the whole thing so that we can see this. But if we cover that right there. All right. Now, oh, shoot. Yeah, I can't even make it bigger, but I think you guys get the point. But this is about where we're at.